Hello guys, welcome to the Trading Parrot. We are over the inauguration day, and in today's video I want to talk about a bullish opportunity. I'm gonna show you a bunch of indicators that are telling me that this is not over. I'm testing the sentiment after what happened yesterday, and people are starting to see the fact that crypto didn't get any mention during the speech yesterday as something bearish, but I'm actually seeing the opposite at the moment. And of course, in trading there is nothing guaranteed, but if you stick until the very end of the video, at least you will see what I'm seeing, and it might help you getting a more complete view of what's going on at the moment. Guys, if you like this type of content, make sure that you're subscribed to the channel. Hit the notification bell to get notified every time I put out one of these videos. The channel is growing, but definitely with your help, we can get this video to 1,000 likes. If we can do that, we're literally gonna punch the YouTube algorithm for not having shown my channel to at least another 60,000 subscribers. Let's go with the content. Yesterday we were observing by a Google Trends a spike in retail attention. This is a candle in progress. As I mentioned, Google Trends updates their data and settles it possibly once a week, I suspect. And I think all this attention that came from the event yesterday pushed it to 52, but I'm going to continue looking at this for the rest of the week to see if they were just tourists coming in for the trade and then going away. As you can see, although there has been so much volatility, and although we made it to 110k, the open interest is still trapped within this range, and it remains tradable in each and every extreme. You get to 32 billion and you get the perfect short. You get to 28 billion and it's the perfect long so far. At the moment we are sitting at the top end around roughly 31.2 billion, meaning that after the rejection we saw at 110k, roughly, that wasn't even enough to push us out of the pattern. Indeed, we just made a trip to the middle of it, and that shows me that people are a bit overreacting, interpreting what happened yesterday. I interpret it as a sell the news event, but a very mild one. If this was a real sell the news, we should have at the very least gone halfway back down, retracing this whole uptrend that we had up until November. But indeed, we're just there in the middle, chilling. And as a trader, the takeaway of this is there is a good likelihood that this is still within the game and that we could continue hitting the highs. On the weekly, this looks like a topping pattern, right? Because we have this top and the top of 109, and definitely if the rejection continues back to the neck, then we get the M pattern, and that, if it was to play out, will have the effect of taking us back to the previous all-time high at 73 and 900, which was the top of March. Of course, that is not confirmed. We are nowhere near the neck around 93.6, and indeed we have done a sweep the lows. In here we cross the middle level of resistance, and we have put this weekly candle in the green, and it seems like this is still an ongoing battle to claim 104.3 to turn it for the first time into potential support. Notice that is the highest close on a weekly basis, so definitely it is resistance. We are respecting it, but that doesn't mean that we cannot take it. Now let's go back and let's look at the past performance. The year here is 2021, and I'm gonna make a bold statement in here. This area with the wick up that came after the dead cat bounce of the BC movement, which we have already had with the BC, at least that is what I'm thinking so far. This wick that we can see in there on the daily basis looks very similar to me to this rejection. In my current interpretation of that is that even though it is in the breakout area and this one is a rejection that takes us back inside the pattern, I'm gonna make a bold statement that I think there is a chance, and we should monitor for that. We shouldn't marry the setup, okay? If you're a beginner, that is not the point, but let's open our eyes and let's keep an eye for potentially this playing out in a similar way that it did in February in 2021, which is you see a rejection that scares the traders, we're back into the range, and then suddenly on the second attempt we take it and we go beyond 38k. So if we did something similar, we could be seeing the price holding. In this case, I would like to see it holding in here. I don't want this rejection to come back inside. I feel like that is a bit late to do that because this was just a week telling us that we are still inside the triangle. Nothing has happened. No one gets angry. But in here we have spent days in the breakout area, and coming back inside, it is a stronger rejection than just a mere candle above the resistance. That is my point. So my preference is let's continue to hold this. Let's continue to put wicks to the downside. 3 days in a row we already have. That is kind of bullish. It's still a higher low. Sure, the candle to the upside is ugly, but this one was ugly too. So could it be that we're gonna start creeping up thanks to all the retail now getting scared? Oh, Trump didn't mention crypto. Let's dump it. Maybe this is not gonna be the administration that is gonna support it. Fair enough. Let's sell it. It's a double top. Yes, it looks bearish, but it did look bearish also in these times. It broke out, came back inside it, testing support, people calling for lower prices. People were probably saying we're gonna go to 28 to 27. It's gonna be a disaster, and then suddenly it started pumping. So let's keep an eye for that, okay? And let's move on. On the 4-hour, we are still in a channel to the downside. We're gonna look for areas of support and resistance, areas that are tradable. Even if we are in a channel to the downside, we can take longs and shorts. At the moment, I see support at around 36 RSI on the 4-hour. I see resistance somewhere at 60. So let's say 36 and 60. So we got 60 and 36 already there. That at the moment has the upside against resistance towards 107.2. And the downside of the channel is 96.7. And if we did pinch that, I want to do it in a 4-hour candle and come back ideally above 99.3. Why is that? Let me remove the reverse RSI. Let's remove Lux Algo and let's focus just on the price action and the trend line. We tested this trend line 1, 2, 3 times, 4 times from the upside. So if there was some sort of rejection here and we went down to that 96, we are taking the liquidity right below that wick. Those are the longs that entered there. So we smash them with the move down. If we were to have that move, it's not guaranteed, hypothetically speaking, of course. Then coming back up this line, then it turns the setup again into very bullish. People bought at these levels, not just a tiny bit. This bounced from 99 to 110. This was a bounce of 10K in 3 candles. Is there demand there? I speculate that there is. They're just gonna move their demand probably lower if we get to this area and buy right below the support on the expectation that we can get a push from there. So this is just the bearish scenario, of course, and I'm considering it on the 4-hour time frame because at the moment we are being held by 102.6, which caused some turmoil in the past. It was support, and after all this crazy volatility that we were expecting, we encounter ourselves now below it. So we are below that line and we need to prepare a potential bearish scenario and plan for it. What are we going to do if it dumps to here? What could be one plan that we can embrace? If we take back the 102.6 and we carry on going higher, no one gets angry. Then we can start looking into a bullish potential. And that bullish potential at the moment is the resistance of the channel with 107 on the RSI. That is very close to testing below the head and shoulders. Remember that head and shoulders that took us by the dollar to 46 RSI? Well, we have been having this volatility and we could come to the confluence of the top of the descending channel together with the scene of the crime. That is there at RSI 62. A little bit higher than the 60 of the channel. Let's see how much higher is that. That is just 108.5. So roughly 1,000.5 of range there of resistance. Going into the daily, I find it pretty cool that we ended up doing what I say. So basically hitting that resistance from this line from August, coming back down and testing 57 as support. So far we are carrying on by the book of trading of the Trading Parrot, if you want. So what is the upside on the daily? What is the support? Well, I think support is still 56. We haven't taken that. This line can be moved slightly, to touch that a little bit better. And in that case, we also touch this a bit better and we are bouncing off. So we have, let's say 55 and then an upside towards 67. So the support is very close to us. That is because I'm taking the support immediately there and I'm kind of ignoring this 35. I should have added that as well. So I'm going to add it. So the immediate support that we are currently holding is 100.8, and that final line in the sand is 87.5. That is if the daily fully resets, and it means that statistics are saying that if we had a big rejection from here and we stop rallying against the white line, which is what I was telling you in the past few days, then the downside worst case scenario is that 87 from the point of view of daily time frame. And I think if we get there, that is a great tradable area. At the moment, I have a bullish bias. I think it's less likely that we get there, but you know me, I never ever neglect levels in the charts. So yesterday I made a mistake in the update at night. I'm gonna refer to it, although it's already mentioned in the update this morning. When we were trading in this area and being rejected by 102.7, the top of the range was 101.9, roughly. Since we broke out to the upside, that has expanded the top of the range higher because this is chasing this movement of the price. And if you focus just on the volume down here, we have a large green candle volume in here, which is at the moment acting as a bullish narrative because we are above that top of the range. I am going to have to ignore the blue line of 103.2, which yesterday I was too tired and I didn't notice in the update that is chasing the price. And unfortunately, even if you look the range of the volume profile to before that, it still uses the latest data to calculate, which is pretty annoying. In my opinion, that is wrong from this indicator. Anyways, I still think that the top of the range is 101.9. And that we are coming down to retest it. Today we are above it, and for as long as we are above 101.9, this is not yet a liquidity hunt, and therefore we shouldn't be interpreting yet as we need to do a journey to 87.5. Of course, if we start breaking those levels and we start doing daily close below 101, 100k is like the last line in the sand, that is psychological as well, then we could do that journey to 87 and I can shift my bullish narrative. But for as long as we are holding the line there, I am happy to be talking still about 107, 108 and all those targets. Alright, so I clarified the mistake. We look into RSI. I need to tell you about what the sneaky whales are doing because they continue to go. Now they are at 0.37. That level hasn't been seen since early in the bull market. People here, the large whales, not people, large whales were accumulating at these levels. Even at this level, they thought, okay, this ignites the bull market, and large whales started accumulating at 21k. They also accumulated below 0.40 in this area on the speculation that that was the bottom of the market, but then it came FTX collapse and it gave us one more level down in the ladder. Anyways, this is bullish. They are accumulating there. Short-term holder realized price is at the moment at 88.5, so it's been climbing up thanks to the price action. That is the average entry of short-term holders. They were accumulating below and they're still holding. That is one of the levels of support, a moving target that we haven't visited in quite a while. Last time it was in October, and the higher we go without touching it, we increase the chances that at some point we need to pay visit to it. Just bear in mind that the number might be increasing and a lot higher at the time we visit it. Also bear in mind that this bull cycle, we are not really respecting it as much as we used to in 2017, so it's not the ultimate support, but it's an area to tell you that is a great buy as long as we are still in a bull market. Yesterday the general markets were closed, so there were no inflows, outflows from ETFs, and I believe today is the day that matters for direction in the market. Why is that? Well, because Trump is signing executive orders all over the place. General markets are gonna tell us how funds and the big boys are perceiving what he's going to do, whether they're going to react positively or negatively. Yesterday it was a holiday, so we just saw the reaction on crypto, so I'm keen to see how the general markets react fact that market opened today and how that drags a reaction again on crypto. So I will expect that this volatility is not done yet. Be ready for that. Careful with the tight stop losses, tight take profits, because there could be another shake in the market in any direction. We are still in extreme greed, and you know what you have to do every morning that we are in extreme greed. You grab a strong cup of coffee and you slap your face 3 times, reminding yourself that we are looking for exits, not entries. We have built in the past 6 months a large position on Bitcoin after selling at 73.5. We are riding that position and we are looking for opportunities to sell Bitcoin, to swap it to other coins. And I'm always going to look up for swing trades in any direction. Markets can always get overbought and oversold, and with the help of other indicators we can identify very close great alpha that is always tradable. But when it comes to you thinking, dude, Bitcoin and crypto is all over the place advertising and I'm fearing that I might miss out, the news for me is you already miss out 80%. And I truly don't care, because yes, Bitcoin could go to 150k, and if it gets to 150k, I'm gonna be very happy with that additional push, but it could also top at 120. And to build that position, I prefer to do it on the year 2, or ideally in the year 1, not in the year 3, where you're looking for a top, you suddenly are looking for an entry. To me, that doesn't make sense. And notice that my comments are based on the fact that I am not planning to hold anything in the bull market. Sorry, in the bear market. That is my goal. I'm gonna go all cash, not financial advice. That is my choice. You do whatever you have to do. Yesterday, there was an in-depth analysis of the stochastic RSI monthly on Bitcoin. And I think what we are seeing in here is unprecedented. It is very important that you keep an eye on what's going on with the stochastic monthly. The video is called Inauguration Day Preparation Room. It's 31 minutes, but there are timestamps. Look up for the analysis where I'm showing that chart and don't miss it. And guys, we're pretty low on the likes. We're 200, 300, 300, and 200. I'm sure that you can spare 1 minute to hit the like down below and write a comment. That really helps the channel. Liquidations continue, mostly affecting the longs, with 74% almost longs liquidated and 630 million in the past 24 hours. On the short term, liquidation levels are at the moment at 98,800, followed by 96k, and that is most likely thanks to this week on the 16th of January that became kind of an order block there, taking the price from 97 to 110 almost, and that liquidity is still sitting there thanks to the risk of those longs. So let's watch out for that. At the moment we are still holding 100k, and in the longer term liquidity we only have above 110 and below 89. So price needs to make a decision in here, in my opinion. If we follow past performance, we should be going straight into the higher liquidity, but if the RSI 4-hour breaks bearish, as I explained, that scenario is not out of the table, and we do another sweep the low in here into somewhere like 96, where these guys enter, we take that liquidity, and if we do a very quick recover above 100k, that is very bullish, and that could be all that we need as a confirmation after that bearishness that we can still go beyond and put a new all-time high. Other things that are keeping my attention as potential bullish narratives when it comes to the order book is this green in here. You can see that we had it 9th of January, it worked out. 13th of January, it worked out. And at the moment is right there at 100k. These longs are placing orders below the price. These are limit orders, and that bidding happening right now has a ratio of 0.21. At these levels we were at 0.25, 0.26, a little bit more, but something is going on in here in terms of interest. Open interest is still not negative like it was in there, but I'm gonna continue to monitor if it reaches these lows in confluence with the bidding that has been a magnificent alpha as well. Longs are pushing higher to 56. They're far away from the 40s, which is typically when they get exhausted and they throw the towel, and that is a topping signal. So let's leave that there. Something else that is bullish is that the delta delta of the recent days is now negative for the first time. We've been almost 1 million up, and now we are 60 something K down. So we have wiped out the longs, and we have done it twice in a row, okay? One time we reached the area of the alpha, that was on 19th of January, and then on 20th of January, we almost get into the level of the alpha. That is what we typically do when we liquidate longs, pretty much all the way to July. You can see these bubbles, the size of the bubble, 1, 1, 2, and now almost 2 in there. That is a great alpha. The delta of longs versus shorts net has decreased quite substantially, but is still not in the red. I would really like to see coming into the red and finding support in the middle of the range there. We haven't been at the bottom of the range for quite a long time. Last time it was on 21st of December. Past 30-day liquidation levels on CoinGlass, we have a large one here at 109.5, which is the largest one at the moment in the past 30 days. That's another data point telling us maybe we should be looking up and not necessarily give up just yet. That can change, of course, if we break structure, but we haven't. So far, I'm gonna say something cheesy, but the trend is still my friend. Subscribe Telegram, Instagram, and Twitter. If we get a big shakeout to the downside, I will let you know the moment I feel that the structure on daily or on 4 hour is broken and I'm no longer aiming that high. A very conservative liquidation level is here sitting at 104, and we got a very homogeneous set of liquidations below that definitely are more loaded than to the upside. The peak at the downside is 90K. We have left very thin fair value gaps to the upside, spanning up until 107. That 107 resonates with one of the targets I believe in the 4 hour I gave you earlier. And to the lower end, we have this bad dude here, the 96K. That was also one of the targets. So I remind you, we are below 102.5. That is resistance. Look up for claiming back that 102.5 to start looking for these targets. Rejection there, taking the lows, and the 96 can be very easily taken. And if we get there and we reclaim the 100K, then the higher targets can be back on the table very quickly. So I don't have any new reading on the general markets. That's because it's still closed. If I do another video in the afternoon, it's probably gonna be a live stream. Maybe we can focus on what's going on with the altcoins. I know, guys, that you're very keen to get TA on all your altcoins, and yesterday I couldn't review all of them. I spent an hour and a half in the live stream. If this video gets a lot of likes, I'm gonna take that as you want me to do the live stream. One way you can help is writing down below in this video the coins that you want me to review. Tomorrow I'm going to have a live stream with Annie from Trade, Travel, and Chill. I know, guys, you like her a lot. I learned a lot from her as well. That's gonna be in CoinViro Trading, so keep a mind note for Wednesday and don't miss it. Guys, if you want to trade Bitcoin and altcoins, have access to leverage and all the extensive array of products of a top-notch exchange, I have two alternatives that are in my top 2, starting with Bybit and OKX. Either of them that you use the link in the description, you can claim pretty substantial bonuses at the moment. Bybit offers 30,000 in rewards and OKX 60,000 based on trading volume. And by using those links in the description as well, you reduce the trading fees, which is always great. If you want to stay away from KYC, my 2 options nowadays that I'm using is Bluffing and Tubit. The advantage of not needing to do KYC is that you can open as many accounts as you want with different emails. Not needing to use a VPN where you live is awesome, although I have to tell you that in some locations they are requiring VPN, and that's why I will tell you, if you have to choose between the 2, just open the account with the link in the description on both. Don't deposit yet. Give it a try and see if it's asking you to use VPN, and if it does, just use the other one. Either of them is giving you very juicy bonuses. At the moment, Bluffing is even giving a Rolex, a MacBook Pro, or an iPhone that you can claim, and Tubit is offering up to 30,000 in bonuses based on deposit size and trading volume. Remember to hit the like, comment. If we get a big number of likes, we go and do TA live in the afternoon. I see you then. Bye bye.